Think back to October last year. Bitcoin was soaring. It was hitting all-time highs. People thought there was no end in sight. Then within 3 months, poof, half its value out the door. And this is no accident. This is just the nature of Bitcoin. And if you look over the last 15 years, you'll see that this is nothing new. In fact, from 2010 to 2025, Bitcoin dropped by 10% or more 31 times, dropped by
30%
or more 12 times, and dropped by
70%
or more 5 times. Now we can compare that to the US stock market, which dropped over 10% 6 times, over
30%
once, and never dropped over
70%.
That's not just a little volatility. That is a different asset altogether. And here's the simplest way to think about it. A stock is like a glass of beer, where the beer itself is a company's cash flows, its revenues, its economic productivity. The foam, on the other hand, is investor sentiment. And those two components combined make up a stock price. Sometimes there's more beer, sometimes there's more foam, but we know for a fact that there's always beer in that glass. Bitcoin, on the other hand, there's no underlying cash flow, there's no economic productivity. It's mostly foam. And even worse, it's not a glass mug, it's a Yeti. So you don't even know how much foam is in it until you take a sip. That doesn't make it bad, that just makes it speculative. And speculative assets can soar, or they can drop 30, 40, 50% like that. And if you're an actor, musician, creator, entrepreneur, your income is already unpredictable. So why anchor your wealth to something that behaves this way? Volatility doesn't hurt on that chart, but it really hurts when you need the money. And if a deal falls through, or a tour gets canceled, or you get sick and you can't perform for a while, at the same time that Bitcoin drops 40%, that can be absolutely devastating. Now, I'm not saying Bitcoin's bad. So if you want exposure to it, that's totally fine. Just make sure you're treating it like the speculative asset that it is. So it should only make up a small portion of your allocation while you build the rest of the foundation on economically productive assets. And remember, when your career is unpredictable, your portfolio shouldn't be.